Good morning, everyone. Good morning. How's it going? Boy, have we had a week, right? We had a week that lasted a month for me. Uh, Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. We got a lot to talk about. We got obviously the markets railing. I mean, you know, is this the bear market of 2025? The market sell-off keeps intensifying, and I'll put my 2 cents in it. I've done so much content previously about everybody being in the pool. There's a rug pull coming. Um, you know, this is the time, seriously, this is the time that my experience will pay off for my account. I don't know about my group. I hope they held it together. I mean, it was an eventful week, obviously. Uh, Look, nothing goes down forever, nothing goes up forever. We know that. But what happens is that with technology, with algos, things get more intense, right? And I get it. Seeing red every day is not good. Okay, it does a lot of damage, and I will go through my charts. I mean, today I may go long actually because I'm going to put the link out if some of you want to come on. It seems like nothing works, right? And you take a stab at something, and the next day it's down another 5%. The point is, this is the time your experience comes into play, right? You've seen the movie before. When I say you, I have. When you've seen a movie before and then you're watching a sequel, and it happens quite often, all you have to do is draw from past experience, draw from the original movie, and separate what's similar and what's not. So what is similar is the speed of things happening these days, okay? What is not similar is also what's similar is the magnitude of the move and how quick it happens. And I don't know how many times I've said this. Market walks up the stairs or stocks walk up the stairs and they take the express elevator down. So when I go through my demolished charts, okay, literally demolished within 10 days, your portfolio does not exist of the market. Your portfolio exists of individual stocks, in most cases anyway, unless you're an ETF holder. But even if you're an ETF holder, from peak to today's low, we had about 7-8% on the S&P 500, about 12% on the NASDAQ. So when you're holding a 3, 4, 5 beta stock, so beta means, for people who don't know, beta is the multiple of how much a stock will go up or down on a 1% move of the index. So let's say your stock is Nvidia. Okay. 140 was the high a couple of weeks ago. I think Nvidia carries a beta of about 2.8 to 3. Okay. So market goes down 12% on triple Qs and NASDAQ. All right. Nvidia hit 108 today. So 140 to 108. That's 32 points. For that 32-point move, did anything change in Nvidia over the past 10 days? Trading days? No. Earnings came out, they were good, but the signs were there. Earnings were great, blew it out of the water. Stock got sold off the next day by 10 points. These are all the signs that you draw from your experiences, okay? The market is telling you something. The market has been telling me something for a while now, right? I'm not going to say, oh, I told you so, this and that. That's childish. But what I'm going to say is that on this drawdown, and I'll put up my account on this drawdown. When the market sells off 12%, most accounts will either get blown out or will go down 30%. Because that's the holdings that they have in the accounts, and then the beta of it being 2, 3, let's say, okay? I'm following stocks that I still like, that nothing has changed, that had good catalysts. For example, Upstart, Affirm, great earnings. 10 days ago, Affirm, after the earnings hits, I think it got up to 82. I just sold cash secure puts at the 50 level, stocks 48. What has changed? Nothing has changed, right? But if you get caught with one of those and you're holding the stock, even if you're holding it long term, which is great, fine, no problem. But what happened to your portfolio? It got wrecked. I mean, even if you're holding a firm at $40 a share, you're looking at a double at 80. Within a week, you're back to even. You know, that takes a toll. Now, it takes many different tolls on, obviously, on your account. The financial part is one. Emotional part is another one. You know, market is, I've said this also before, market is a mechanism to make everybody wrong, okay? When you think things are going to stop, they don't stop, they go further. When you think they're going to stop on the upside, they don't stop, they go further. The perfect example of being Palantir. But I was extremely cautious. Now the picture is, you know, worth 1,000 words for me. And the writing's on the wall. We don't have to think much now. Okay, now we're set. Well, how are we set? Am I celebrating a 12% down move, 30, 40% in some stocks to look at them as a massive buying, lifetime of a buying opportunity? No. Am I going to trade? Yes. Is the bounce going to come today? I sure hope not. Because the sellers are so willing to sell, and it doesn't look like, but they're getting exhausted. I could tell also by my experience watching many, many different things. They're getting exhausted, and nothing goes straight down. So what we'll have is we'll have a face ripper of a rally. I'm hoping that it starts maybe midday Monday, or we'll go through the Friday crash, mini crash, Monday crash, and then bounce. It's not even use the word crash, but you know, technically, according to CNBC, which I just watched, I watched Powell talk about it, which he didn't say much, obviously, as usual. Markets oversold. We had a little bounce before I came on, so I don't know where it is now, but the sellers are very willing to sell at any price at the moment. So when that happens, you just kind of know we're at the end of this leg. So just like when we were going up, we had multi-legs, right? I think we're going to have multi-legs down. I don't think we're going to have that little V bottom that everybody's expecting, because that's what the market's going to do. Everybody from the past, they're all like, yeah, it's going to be a V bottom. We're just going to go make new all-time highs. No. Why is that?